You record it. You record it.
All right. Start again.
Okay, cool. So yeah, guys, like I just said, the reason that this strategy attracted me as much as it did was because of the risk to reward ratio, right? Like a little example, if I'm using 1 to 3, and if I'm risking $100, for example, my returns would be 300. Yo, Sam, I need to mute you guys.
Yeah, mute everyone. I'm gonna do that.
All right. So yeah, like if you're using any other mainstream forex strategy, right? And if you've got a risk to reward of 1 to 2 or 1 to 3, if you're risking 100 USD, your returns are going to be 200, 300. But with this, you're risking 100 USD, your potential returns are 2,000 or 3,000. So the second the person who taught this to me taught me this, I directly stopped trading the way that I was before. If you're in the group, you must have realized I don't give out signals anymore. I don't trade breakouts like I used to. Now it's strictly this and only this. And I'm going to give you examples of it happening in real time and an example of what I'm looking at right now, okay? So if you guys are on the group, you've probably seen the USD CHF one. I've probably seen it 1,000 times, so I'm not going to go on that one now. I'll start with CAD CHF. So basically, I'm not going to go into why I was expecting it to reverse. I just want to show you like an overview of Wyckoff within itself, okay? So basically, the strategy is you look for 2 equal lows. I'm not going to start labeling everything because it's just too long to explain. You guys have the PDFs for that. But you look for 2 equal lows or 2 equal highs in either an uptrend or a downtrend. And then the psychology behind an area of support is that an area of support is where buyers tend to enter into the market, and that's where prices push up, right? But this defines that. This says that when you have an area of support, you expect that area to be broken before it's rebroken again to shoot up. So like, take this as an example, right? We had a push up, and this is a retracement on a higher time frame, okay? Like Sam said, you've got higher lows and higher highs. So you've got your higher high here, you've got your higher low here. This is an uptrend in the long run, okay? So what do you think everyone was doing when price came back to this area here? When price was making its way down, what was everyone doing here? Everyone was buying, right? Everyone was buying. And then it broke through this region. And now it's retested it. What do you think everyone's doing? Everyone's selling. But I'm willing to bet one of my bulls that this is going to break and going to continue to go back up. Guaranteed. So basically, institutional traders like to take our money. That's our responsibility, to take our money, right? They know that we're going to be buying here. So what do? They push price lower. They know that we're going to be selling here. So what do they do again? They push price back up again. And this happens time and time and time again, right? So the reason it comes back down here is a completely different topic. I'm not going to explain that now. But just know that when you have 2 equal lows or 2 equal highs, majority of the time, price is going to break through that region knowing that everyone's going to buy, only to shoot back up and continue upwards. And I know this has happened to you guys before because it's happened to me countless times. Like, I used to be a ranging trader, not even a trend trader. Like, I used to trade ranging markets, and these are the kind of areas that I'd look to buy. And I'd lose. Like, I'd win, but I'd lose quite a lot of the time, right? So that's one example. Another example is with GBP AUD. This is something that I missed. I was really pissed off that I missed this. Okay, so look, what do you think everyone was doing in this region over here? If you ask any, 96% of traders in the world what they were doing in this situation, they saw a pin bar and everything, they were probably selling, right? What happened to them? Price broke through, and then what were they doing? They were buying. And then what happened? Price came back down. So when it gets here, they sell, they get stopped out. It breaks, they buy, they get stopped out. That happens so many times, it's ridiculous, okay? So what I'd advise is, if you guys go through the PDFs with the Wyckoff thing inside it, and just start backtesting different currencies and try putting the labels on them, you'll get what I mean. So now I'm going to show you like a live demonstration of the trade that I'm looking at right now. And if you guys have read the PDFs, you know this. So like the psychology behind each part of it is explained in the PDF. Again, I'm not going to go through that now, but I'm going to show you like a live example of this, right? So I'm going to open up USD CHF. And if you guys remember, I think 2 weeks ago, I found a sell somewhere in this region here. So let me go to the 4-hour time frame. So what do we have here, guys? We've got equal highs, right? So over here, we had equal highs. When price was coming back over here, what were people doing? Double top, triple top. What happened? Price broke through. People got stopped out. When it broke through and retested, what were people doing? They were buying. What happened to the buyers? They got stopped out. And look at the speed at which price dropped. Like, I entered somewhere over here. Like, I brag about this trade all the time because it's probably my best ever trade. I had 0 drawdown. I had like a 6 pip stop loss and a 265 pip take profit, right? I'm going to calculate something for you guys. I'm not going to tell you how much I risked on it. But say, for example, I risked $100, right? And I entered over here. My stop loss was just about, I'd say 5 or 6 pips. My take profit was 250. I'm not going to lie and say it was all the way to the bottom. It was about 250. Risk to reward of 1 to 43. That means if you place this trade and risked $1, your return's $43. If you place this trade,
this thing is on our like Slack. So if you think we're lying, go look at our Slack.
Go check the before and after. Yeah, it's there. So if I risked 100 USD, right? You times that by 43, you've made $4,300. Like, do you know how fucking crazy that is? People would die, like proper investors who put their money in banks and make money off interest rates. They would kill for 10 to 15% per year. This is per year. Guys, you know how long this took? This took like 3 or 4 days, man. So 3 or 4 days to make a return on your investment of like 1 to 43, that's fucking ridiculous. People would kill for that. And this is just one opportunity. This happens every single day. There's opportunities like this all the time. Like, I've taken trades based off of this 4 times, and the minimum like pip count that I've hit is 100 pips. Like, that's the lowest that I've hit so far. And the reason I'm not giving signals out on it yet is because I want to master it a bit more. I want to learn more about it and prove that it's consistent over at least 10 to 15 trades before I start telling you guys when to buy and sell, right? And that also gives you guys time to learn the psychology behind it, to learn the meaning behind this AR and ST and ST and phase B. Like, you need to understand the psychology behind it if you want to trade it. So now back onto USD CHF. Let me just get rid of this. Second. Let me get rid of this again. I'm going to go back onto the daily time frame. Okay, so look, I found a video on YouTube for you guys because I want to explain you what happens when price wants to reverse, right? I think on my first Zoom call with Sam, I gave you guys an example of Dragon Ball Z. So like when I was a kid, I used to love Dragon Ball Z, right? It was the first thing that came into my head when thinking about this. So we're in a downtrend and we're seeing like, we've seen half of a Wyckoff schematic and we're expecting price to start reversing, right? So the reason it doesn't reverse straight away is because it doesn't have the energy to reverse right away, right? Price needs to accumulate before it can reverse. And by accumulation, watch this. Okay, when he's saying ka, he's accumulating. He doesn't have the energy to throw that fireball yet, right? He's accumulating all of the energy. Accumulation, boom, reversal. You get what I mean? Price needs to accumulate. It needs to build on energy.
That's like the dumbest shit I've watched, but it actually makes sense.
Bro, before price can reverse, it needs to accumulate. So right now, we're in that kame phase. And then the beam of light is when price reverses, if that makes sense. Okay? So now,
can I just say something like 1 minute just quickly? I've mentioned this like in every zone. The reason like why, like when Mustafa says it needs to be accumulated, think about it, yeah? When we say liquidity, what does that mean? It just means like in layman terms, it just means there's like orders, like tons of orders around there, okay? But now, when you watch like YouTube videos, right, you will say, oh, you should have, like, every like person who explains support and resistance, they'll be like, oh, you should have sold in risk resistance or like bought at that supports, right? But they never tell you what you do now, okay? Like they'll always tell you examples that have already happened. So now, okay, how can you identify like that's actually the supports? Like in textbook rules, it says a trend line has like 3 touches. A support resistance has like 2 touches to confirm it's a support resistance, right? But now look at this. We had 2 touches now, okay? But before, like if you watch YouTube videos, they'll be like, oh, you should have bought it a 2nd touch. No, that's wrong. Okay, if you look at this now, what will happen when it comes back for a 3rd touch, okay? There'll be like buy orders there, right? There'll be like obviously like people buying in that support there. But not only that, their stop loss will be, wait, can I draw on your chart? Or Mustafa, can you draw? Okay, so like they will buy there and their stop loss will be just under the zone, right? Not
Okay,
only
guys, so
that.
what he means is people are going to be buying over here. Why? Because they've seen support, support held. They've seen support again, support held. So to them, this is double bottom or triple bottom, which in my opinion is complete bullshit. That stuff doesn't exist. I'm sorry, guys, but if anyone has told you to trade double bottoms and triple bottoms, they're just copying what the masses do, right? This is not what the masses do. This is what institutions and banks do. Like, this is what the big boys do, okay? So over here, what I'm anticipating, sorry, son, what I'm anticipating is for price to push all the way back up. And I'm gonna give you the exact point where I'm expecting it to reverse, right? The price is gonna push back up, right? When it comes back down, everyone's gonna start buying here. They're gonna get stopped out by, one second. They're gonna get stopped out by a continuation or push downwards. So when everyone's buying, they'll get stopped out. And then when they see it retest, they're gonna start selling. And then they'll get stopped out again. And price will continue moving upwards, right? But yeah, Sam, go on.
All right, so three types of people, right? Two or three types of people, right? The first type of person is they will have like buy orders there, and they will get stopped out and the price goes below, right? So again, what's the market maker method? The guy behind the computer takes all the retail money to himself, right? Something like that. And then the other kind of traders are, they will have like sell stops under the supports. So you know, if a support breaks, it turns into a resistance, it's going to keep continue going downwards, right? Now that's that's where they'll have like sell stops, right? So they'll have like buy limits with a stop loss under there, and just around the stop loss, they'll have a sell stop with a stop loss above there. Okay. So what the banks will do, they will trigger everyone's buy limits and hit their stop loss. Not only that, they'll trigger everyone's stop losses and hit stop orders and hit their stop losses as well. And then the other kind of person is like, when the price starts coming back for a pullback, they're going to sell, and the banks are going to like explain their stop losses as well, right? So the banks will take all of that liquidity, all of the orders or like the money that's trapped down there, and take all of it and then continue to the direction it wants. So yeah, that's just the reason behind like the third test going down and up and like taking everyone out and then like reversing back. So yeah, Mustafa, continue.
Okay, so basically, I only saw this today. Like, I saw this exact thing today. I compared it to this part over here, and it looks exactly the same. So you got your preliminary support. You go back onto the daily, you see you've got your support. And then after that, you have a push up and then a push down. And that's called your selling climax. Push up, push down, selling climax. Automatic rally, secondary test, right? Go back here. You have your automatic rally, your secondary test. So it forms like a little a double top, as you guys can see over here. And then a push down where you have your secondary test in phase B. Now, if you guys look closely, you'll see the secondary test in phase B is normally slightly lower than the selling climax, okay? Slightly lower. That is why I haven't bought this yet. That's why I haven't bought this yet. So I'm waiting for this is like an anticipated area for me. There's no particular reason why I've drawn the line here. I'm anticipating it to go somewhere around there, and I'm not going to enter there. I'm going to tell you where I'm going to enter in a sec, right? But you're expecting it to come down here and then push all the way back up before it comes back down for its third drive, which 9 out of 10 times is lower than both the selling climax and the secondary test. Now, there's two types of accumulation schematics. This is the first one and the most common one. The second one, there's no spring. You see how there's a spring here? There's no spring on the second one, right? Now, I'll be honest with you. Like I said, I've only traded 4 setups using this. So I don't trade the ones without springs because I personally don't know where to enter. I only like to trade this one. Until I'm more confident with this, I'm not going to be touching the schematic 2. But this is what the schematic 1 looks like. If you want to take a screenshot. If not, if you're on our group, read the PDF. If you're not on our group, we'll send you the link to the group, right? But yeah, guys. So now, obviously, I'm not going to take the trade off the daily. I know this is going to come slightly lower. So what do? I go into the 1 hour time frame or the 4 hour time frame. And on the 1 hour time frame, we have a micro schematic accumulation schematic 1 within the daily schematic 1, if that makes sense. So we've got our first drive. We have our second drive. We're waiting for our third drive to be slightly lower. And then I'm not going to enter there because I don't know where the third drive is going to stop, right? I'm going to wait for the third drive to push all the way down, come back up, and then use Sam's price trap to catch my entry. Now, 9 out of 10 times, like, I can't say 9 out of 10 because I've only taken 4 or 5 of these trades, but 5 out of 5 times so far, when it does retest to this region, I'd hardly get any drawdown, maybe like 2 or 3 pip drawdown, right? So I'll have a stop loss to be safe of like 7 or 8 pips. So let's just move this slightly higher here. Okay. Obviously, my target is going to be a lot higher, but if I'm just going to scalp on the hourly time frame, I've still got a risk to reward of 1 to 20. That means if I put down 100, my returns are 2,000. It's just crazy, guys. And this isn't even half the target. The target on the daily time frame is like, assuming it's going to be from somewhere over here, almost 250 pips. And the whole point of this is to accumulate so we can push all the way up after the third drive. So now I'm so sure that this is going to go back up, right? And when it gets back up, I'm so sure that it's going to come back down. So I've got a buy position here in my mind already. I've got a sell position in my mind already. And then I've got another buy position in my mind already. The third buy position, assuming it's going to be somewhere around this region here, my target won't be up here. My target will be all the way, God knows where, like I'm on a swing trade. So imagine having like a 500 or a 600 pip take profit and like a 5 or 6 pip stop loss. How much fucking money can you potentially make doing that? And yeah, so this isn't something that you're going to come across all the time because it takes time for price to accumulate. But one win with this is bigger than 1,000 wins using any other strategy you can possibly think of. So I'm not trading every day now. I'm looking for these setups. If I can get one a week, I'm happy. If I can risk $100 every single week and make a minimum of 2,000 back every single week, that's 8,000 USD per month, man. Like, what more do you want, you know? That's crazy. And that's trading with a small account. Imagine you do this and you compound your account to a point where you've got like 100,000 USD. 1% of 100,000 is $1,000. You're risking $1,000 to potentially make 20,000, 30,000, 40,000. It's crazy. It's crazy, guys. So yeah, this is something that I definitely advise you guys look into. Something that I'm personally going to dive a lot deeper into. I want to know literally everything about this. So when I do post my signals for you guys, when we post our signals for you guys, you know, they're on point. But so far, so good. 100% success rate. I've taken a trade on USD CHF already, taken one on GBP AUD, CAD CHF, NZD CAD. All of them have hit a minimum of 100 pips. And all of them give you more than one entry opportunity. So let's say, for example, you miss this. If you go into the hourly time frame, there will be times where you can use Sam's price trap to catch further entries. So it's not, if you miss it, it's not like it's gone. There's still opportunity to catch it again and again, right? But yeah, guys, that's literally what I wanted to explain. And if you're wondering what this imbalance zone is, that's some more advanced stuff. We'll get into that some other time. Basically, there's an imbalance between buyers and sellers there. And this isn't something that's guaranteed, but when that happens, there's confluence to buy because that area needs to be filled. But I'm not going to explain that now. That's something that you need to learn after you've learned Wyckoff. But yeah, that's pretty much all I wanted to explain to you guys. And yeah, just please read the PDF.
Father, there's a question from Nate.
How to determine your targets?
To derive your targets, and how can you tell they're accumulating?
So you can tell they're accumulating by looking at this, bro. So if you've read the PDFs and if you've back tested, you'll be able to spot this with ease, man. Like obviously initially you're not going to spot it straight away. But I mean, the more you read it, what I did, guys, is I took a pen and I took a paper and I physically drew this, right? I drew this so many times to the point where I can now draw it without even looking at it. Like once, it's not even going to take a lot of time, like 10 minutes, 20 minutes, just keep drawing it over and over again until you can draw it without looking. And then start looking for it on the charts and look at the reaction it gives out. And
here's one more thing. For like accumulation, like how you can know like the institutions and banks want to come into like this market. Like what most people try to do is like if you find a support, they're gonna like buy the other like the next bonds to it, expecting like the price to reverse. Okay, like trend changes. Like you know when I mentioned in the start, like 80% of the trends are continuous and 20% are reversals. Okay, trend changes don't just happen in like one bounce and boom, we're like there. No, they take a while. Like it's like think about it, like institutions, they're like putting billions and billions and billions of dollars, like not like people like me and you, like even people like millions of dollars in net worth, like they can't really like move the market a lot. Okay, so they need to have time. They kind of like there's not enough like volume, like there's not enough like liquidity available there for them to like accumulate whatever they want, right? So like accumulations take a long period of time. So I haven't like really looked at Wyckoff with the Bitcoin chart. But if you look at like the 3,000 zone, right? It was there for like several weeks, right? Just trapped between two zones. just trapped under there. We're not going below it, we're not going above it. But after a while, we saw a breakout candle get passed through that zone. That's when you know the banks have accumulated, and that's when you actually want to take the long position. But just one rule, accumulation takes a while. Like if you actually want to like play against the trend, remember like there should be like a zone where price is actually taking a while to like break out of, right? And yeah, there was this other thing I wanted to say. Yeah, about Wyckoff. The amazing part about Wyckoff is it works on every time frame. Okay, this is just an example, like on the daily time frame, but it works even in a 1 minute time frame. Okay, we've explained this before. For like over like 200, 300, 400 pip like swing trades, right? We actually go to the 1 minute time frame. Like think about it, like 1 minute, right? Like price does the same thing in every like time frame, right? So we go into the 1 minute time frame, look for a Wyckoff setup, and then enter the trade to like get that like 5 to 10 pip like drawdown and like a 20x like whatever like target it is, right? So the way we do it in a 1 minute time frame is the same thing. Like you will find a first drive down and the second drive down, whatever, like they're probably like double bottoms, so like slightly different, but like almost double bottoms. And the third drive down is where we actually like take a risk. Okay, like wherever down it goes, we just take a risk buy, and we hope for it to go back up. Okay, and when you see double bottoms and you see like a breakout from that, like most of the times it will like come back to the zone. Okay, so we take that risk and then like no stop loss, right? That's what we do, like for the minimum drawdown. But that's the 1 minute, right? What you can wait for is like the fake out I explained or the test. So like if you look at like Mustafa's chart right now, yeah, like do you see where the test is? So we break out, we come back in the range, and then we test the range and then continue the movement upwards. So in the test, yeah, like you see this happen in the 1 minute time frame over and over and over again. Like entering the test, your stop loss below the low, which is if it's a 1 minute time frame, there'll be like probably like a maximum of like, I don't know, 7 pips or something. Imagine having a stop loss of 7 pips, but your take profit is in the daily zone of like 200 pips. So you go to the daily or weekly zone, okay, like that's where your chart is, but you find your entry in a 1 minute time frame. And then we have done this over and over again, like go through our Slack, and we have won so many trades that way, like so many. And yeah, just look at what he's explaining. So Wyckoff happens in like every time frame. Basically, okay.
Continuation of push-up. So what you want to look for, and it doesn't have to be exactly how it's labeled. Like I'll show you why it doesn't have to be exactly how it's labeled on GBP AUD. But what you want is you want 1 drive, 2 drive, 3rd drive, and then this is where you want to, this is your confirmation to enter that breakout retest. And this even applies on the 1 minute time frame. Like when I first heard that it applies on the 1 minute time frame, I thought it was really stupid. Like the fuck's the 1 minute time frame, right? But I saw it work right in front of me, and that's how I managed to catch USD CHF initially by the wick. Like I'd show you guys, but it would be very difficult to open the 1 minute time frame and then go all the way back to where it happened, like last week. But yeah, this happens on literally every time frame. So you can use it as confirmation to, wait, let me just get it. 1 second. Okay, so like, how do I know that this is the completion of the spring or this is the completion of the 3rd drive? So when price gets to one of my anticipated regions, I'm gonna go into the 1 minute time frame and see if I can find a mini Wyckoff schematic there. If I can, good. If I can't, I don't give a shit because I know it's gonna push back up and I know it's gonna retest, and that's where I'll catch my entry. So your first entry will be at the end of the spring, right? The second entry will be at the test or the LPS or whatever you wanna call it. But yeah, literally, that's literally it. Like it's really simple once you understand the concept behind it.
Yeah, do you have?
Like, I'll give you another example.
Okay, sorry, go on.
Sorry.
Go on.
So like on GBP AUD, this wasn't like a perfect schematic 1 or 2, but like I said before, we saw equal highs, right? And I'll show you where I missed this, and I was so pissed off because I would have been like 400 pips up right now. But 1 second. So yeah, we had a 1 drive, we had 2 drive, or equal highs, or whatever you want to call it. And then price broke up and all the sellers got stopped out. And then people started buying, price came back down and the buyers got stopped out. Now, where would I enter in this situation? Because I'm going to know when this is going to stop, right? I don't know when this push up is going to stop. But what I do know is, I do know price trap, man. So if you come here, this is where I wanted to enter. I even marked it out and I missed it because I fell asleep. I was really pissed. But as you guys can see, this is your resistance, right? Price broke through, came retested right there. This would have been your entry. Look at the drawdown. Like, let's say you have a 15 pip stop loss, you would have been up by 274 pips by now, man. And this is probably going to drop to down here. Okay, so now look, how do you know when to start looking for situations like this? If you go into the daily, it's pretty obvious we're in a downtrend. It's very, very obvious that we are in a downtrend, right? So you have a push, you have a correction, you have a push, this is your correction. Are you expecting a continuation or push? Downwards. So before that continuation or push happened, we saw price begin to accumulate for distribution, right? And basically, Sam is the one who taught me this. The longer it consolidates, the longer the consolidation, the bigger the breakout. So this is consolidation on the daily time frame. How big do you think the breakout's going to be? So all this time, price has been gathering energy, gathering energy, gathering energy. Now it's going to be pushed down with quite a lot of force because it's gathered up quite a lot of energy, right? Even if you look at the price action, look at the size of this pin bar. That means buyers tried to flex all the way up to here, right? A 200 pip wick before we push down. Like, look at the price action speaks for itself. So you've got the price action, you've got the trend, you have support turn into resistance. Like, you even have the two drives, the breakthrough where people get stopped out, retest. Like, there's just so many matters of confluence that are indicating that this is going to continue to drop, right? And it happens time and time again. Like, if I go into CAD CHF, I'm not going to explain why now because it's long and complicated. But this gold line is where I wanted to enter. When I missed this, I was pissed, okay? But if you dive in a little deeper, you'll see it play out here again. So where's the, actually, yeah, you've got your one drive, you've got your second drive, you've got your third drive here, and you've got your fourth drive over here, right? This is your previous area of support. What did price do? It broke through, it came back for a retest, and it's shooting up. It's at least 49 pips. But if you would have caught it from my anticipated entry, you would have been up by 100 by now. So like, guys, literally, like after the third drive onwards, the minimum I've caught is 100 pips. It's crazy. It's crazy. But yeah, man, like that's pretty much it for me.
Do you have Slack on your computer?
Nah, bro.
Oh, what the hell, bro?
No.
Yeah. Okay. There was this one. All right. Yeah. Just like an example.
Yeah.
So on our WhatsApp, we actually had all the 1 minute entries we got. I couldn't find it on the Slack, but just look at this one here as well. Yeah. EUR GBP, we called this on Thursday, right? Just like, I don't usually trade on Friday. I don't think like any of us do. Like, if you do, it's just like scalps and stuff like that. And yeah, we have 10 minutes remaining. EUR GBP, like the price was here, right? We saw like so many equal lows. What does that mean? Everyone are now waiting for a long, right? Everyone will be longing here. This is what I say, right? Let the price break out wherever it goes to, buy there, right? And this worked out exactly. You can go into the charts and like look at it. EUR GBP 30-minute time frame. Enter over here, or wait for it to come up, make a test, enter then.
Just to add one thing, bro.
Yeah.
If you want to enter at that breakout, like the first arrow, you see the first arrow, right?
Yeah.
If you want to enter there, you wait for Wyckoff on the 1 minute. Don't enter blindly because price could continue to drop.
Yeah.
If you want to enter blindly, you enter after it's been like he drew with the arrows. So like where the second arrow is,
right?
That's where you guys want to enter blindly. But the first one, you can't just enter randomly, man. Like it could continue to drop, you know.
So on the 1 minute, what you want to look for is the same thing, right? So obviously you cannot have your 1 minute chart open like the entire time, right? All you do is like set an alarm or whatever. There's like so many alarm apps, but once price reaches your zone, that's when you go into the 1 minute time frame. What you want to look for in the 1 minute time frame, it's something like equal lows, right? Where price is like creating some sort of support, but it cannot like get past it aggressively. What you want to do then is wait for the test to happen then. So wait for it to go down and then up. On the 1 minute, when it comes back for the test, your drawdown will be like just under that stop loss, which is like probably 5 pips, right? Same thing like we mentioned this before. That's the 1 minute. So under that zone, the test you enter, and it will be insane. When you enter, it will still be like down there, right? But then you will ride this entire trend up, and this is exactly what happened. And same thing with this as well. Impulsive move, correction, and then just an upwards movement again. So like, yeah. There's a couple of questions in the chat.
Bro, let me share the screen one more time.
Yeah, go for it.
All right, cool. So what I'm gonna do now is, Sam, obviously help me if you can, but I'm just gonna answer everyone's questions.
We have
If I
10
can
minutes remaining,
find,
by the way, about like 7 minutes. So
where's the chat?
so on that pop-up thing.
Yo, Sam, can
Yeah.
you read the questions, please? I don't know where the fuck this shit is, man.
Okay, so the
So Nate
first
had a
was-
question first. Yeah.
So what was Nate's question? So, how do you tell when the institutions were accumulating? So I think we answered that, didn't we?
Yeah. So that's simply by just looking for a pattern similar to what's in the
Yeah.
PDF.
Okay. So is it that we look for Wyckoff when a market starts to range?
Yeah. Like, okay, not necessarily, because Wyckoff, like I said, happens on all time frames. So it's literally happening all the time, right? But it's obviously easier to spot when you see that a market's ranging. So like the only reason I spotted this is because it's a ranging market, right? It's not trending anymore. So this could be a potential reversal. So yeah, basically what you want to do is you look for a ranging market and see if you can label it the same way it's labeled in the PDF, or you want to look for equal highs or equal lows, like on GBP AUD. So you had your equal highs here, and then you want to wait for that to be broken back through again, retested, and then shoot down. That makes sense.
Yeah. So yeah, for like myself, I don't really know Wyckoff a lot. Like I don't really know like everything. What like I know like automated rally and like what AR stands for and all that, but I don't really know the logic behind it. All I look for is like equal lows or price like forming some sort of support, or like if it's like on an uptrend like forming some sort of resistance, something like that. And I'm obviously wondering every trade. Okay, you will see it from resistance when it goes up, breaks out, I enter. When it comes back down, I take some profits. Like most of the times, like it doesn't go like the entire like 20 RR you're intending it to go, right? But you take profits along the way, and then once when it's like slightly like whatever, like move your stop loss to break even. That way, like you win so many trades, like so many. Always take profits along the way, right? So what I always look for is just like equal lows or highs. It's not a must that it should be like two equal lows. It can be as many as long as like there's a lot of, like the more equal lows or like equal highs, there's like more liquidity up there or down there. Yeah. But the second question is.
Okay. Also, this person's asking if we could post the charts on Slack. I'll post the charts for like educational purposes, but like don't take these as signals, guys, because like I said, I'm still in the testing phase myself. I don't want to give these out as signals when I haven't built up enough confidence with it. I mean, I'm confident, but I want to win a couple more trades doing it before I give them out as signals. So I'll post it so you guys can learn, but I'm not saying that these are signals. Don't take my word for it, okay? I'm not liable for any of your losses. But yeah, and also
Okay, so,
I think Nate asked something again.
yeah, I saw that.
Ever expect multiple fake outs to really fuck with people? To be honest, no. I'm looking for like equal highs, that one fake out, and then after that one fake out, if we break back into the range, I'm expecting it to continue to drop.
Like think about it, like fake outs happen by institutions to like retail traders. Why would institutions want to fake out institutions? Or, I don't know. I've never seen that happen though. I've never seen that happen.
Yeah, neither have I. And then also, did you go over reaccumulation versus reversal? So look, it's basically the exact same thing. If I go back, this is my favorite pair, guys. I love USD CHF. But basically, wait, fuck it. Let me start on the daily. We've got 4 minutes left. If I go back onto the daily, right, you guys can see that we're in a downtrend. So now if we see a Wyckoff distribution schematic here, that obviously means that we're reaccumulating for a continuation of push down. Okay, so we know we're in a downtrend. We're looking for Wyckoff distribution so we can sell. And we got it here. So we had one touch, two touch, that's the third touch, continuation of push down. So that's reaccumulation, right? And what we're looking at in the long run is basically reversal, if that makes sense. So yeah, obviously it's safer to trade this if it's reaccumulation, if it's like a continuation, because you've got the trend backing you. But if it's the reversal, and if you see something like this on the daily fully play out, then you know you're good for that reversal, man. But yeah, is there any other questions? Okay, yeah. Yeah. I think we're done, bro. Unless you've got something else you want to add, Sam.
No, nothing. Like, do you guys have recommendations of what we can actually do next week? So what I was thinking is talk about like basic supply and demand, and something like that, like what the difference between supply and demand and support and resistances, and whatever. I don't know, like if you guys have anything to add, maybe we can like talk about that as well. Do you think it will work on any time?
I don't know why I'm typing when I can speak. The higher the time frame, the safer. Like if you're looking for it on the 1 hour or on the 1 minute or 30 minute or whatever, that is just confirmation for you. Like, but if you actually want to catch these big moves, it's the weekly, the daily, and the 4 hour. And then you use the 1 hour and the lower time frames to be a bit more precise with your entry, if that makes sense. So like, look at what I did here, right? I found this on the daily, and now I've dissected it to the 1 hour to try and look for an entry. But I'm a bit fearful that this could be a schematic 2, and I might miss it. So I think that it could be this. So 1 drive, 2 drive, no third drive, just consolidation before the push up, right? And that could be what's going on the hourly time frame right now. So if that happens, I'll have missed this move, and I'll have to wait for the third drive on the daily time frame, or catch a price trap continuation somewhere.
I know people might be thinking that the daily time frame takes like, I don't know, weeks to play out, but it's not like that, man. Like even on the hourly and stuff, you'll find that a lot. But yeah, you'll see it in our groups, man. Like post stuff like this like almost every day. The only thing is like on the daily, you'll find like those big like massive moves. On the hourly, you won't find that massive move. And even if like Wyckoff will work, but it will not reach your target. So we will take profits along the way, but it won't reach your eventual target. So obviously the higher time frame, like Mustafa said, the safer.
Okay, in regards to price trap, if you don't have a third drive, then you don't want to look for price trap until we break out of the range completely. Because it could be just playing around before it comes back down for a third drive, right? So if there's no third drive and push back up, that's like third drive and push back up is the only time you want to use price trap, if that makes sense. If you want to use price trap and there's no third drive, you look for a price trap setup after the range has been broken. So like somewhere around this region here. Okay. Yeah, guys. Thank you for jumping on. Sam, I learned some shit from you today. And thank you for that.
Likewise, bro.
Yeah, man.
Yo, first of all, wait, chill. Yo, Nate, I want to get into Eric Chill's group. Help me out. Nate, bro. Wait, you're muted.
What was that, man?
I want to get into Eric Chill's group, bro. Help me out.
Yeah, I can. I'll. I think my membership is ending. Let's see, September.
Oh, is it? Oh shit.
I can. No. It might be kind of weird if I message him and be like, hey, I changed my email.
Right.
Can I get a link?
Yeah,
it might be kind of weird.
Yeah, this other guy actually messaged him, but he never replied him back.
Yeah, that's kind of messed up that he